The Securities and Exchange Commission is expected to approve a rule that will allow startups to raise money from ordinary people. The rule would lift a ban that only basically lets wealthy people invest in these projects. And while it may sound like the playing field is being leveled, as Bob Pisani tells us, there are a lot of risks involved.
Mom and pop crowdfunding for startups is about to become a reality. Now that's good news, but it also comes with a lot of red flags. Tomorrow, the SEC is expected to issue a final rule that will allow small companies to directly raise debt or equity from friends, from families, and interested investors. This is a radical idea. Since the 1930s, only accredited investors, these are rich people with $1 million in net worth or who earn at least $200,000 per year, have been allowed to invest in startups. Now that's about to change, and soon anyone will be able to invest through websites called funding portals that will be maintained by broker-dealers. So think of it as Kickstarter for non-public companies. But it's a little different than Kickstarter. When you invest in a Kickstarter project, like a movie, for example, you don't have any equity in it. You only get a reward, like a copy of the movie. But this is equity. You would actually own a piece of the company here. It sounds terrific, doesn't it? I mean, why should only rich people investing in hedge funds and venture capital firms and angel investors and all that stuff be allowed to get in on the future Ubers of the world? How about the middle class? So you can see why this is generating a lot of excitement. Leverage the internet to grow companies, job creation, wealth creation, less red tape, less costly regulation. But you can also see why the SEC has taken 3 years to look carefully at this. How do you strike a balance between protecting investors against fraud and making the regulations so onerous that it's prohibitively expensive to raise money? We don't know. We'll find out tomorrow. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.